Before 2020, regular investors were mocked by Wall Street as the dumb money, while hedge funds and institutional money managers, with their armies of analysts, were the smart money. And while retail investors can never match the amount of research done by those institutionals, the sheer size of the group gives it another power, a power to move markets. Individual investors' share of stock trading has surged from just 10% in 2011 to 25% over the last few years, giving retail investors the power to move markets and squeeze short sellers out of a stock for double-digit returns in days. So for this stock list, I wanted to combine those two strengths, the market-moving power of retail investors with the deep research of the institutionals, to find the best Reddit stocks to buy right now. Let's get started with shares of Canoo Inc., ticker GOEV, under $1 per share, and a market cap of just $273 million. And for each of these meme stock darlings, we'll be using the Robinhood 100 most popular list to gauge popularity among retail investors. I'll be counting the list up to the favorite with the most hedge fund and institutional ownerships, along with short interest in the shares and upside case for investors. For example, here we see 13 hedge fund owners and 235 institutional portfolios hold shares of Canoo for about 14% of the total. Insiders own just 8% of the company, and it's interesting that private equity and venture capital still owns about 13% of the stock. That makes it the least owned of our Reddit stocks by those big money players, but like many penny stocks, there is still an upside case to be made here. Canoo is a pre-revenue electric vehicle company with about $2 billion in total orders for 60,000 vehicles as of the third quarter of last year. It's ramping up its contract manufacturing and planning on larger scale manufacturing within the coming years. Of course, the question here is whether there's room for another EV company and whether the market is going to wait for Canoo. Tesla has been selling cars for more than a decade. Those legacy manufacturers like Ford and GM are just getting started, and other startups like Lucid and Rivian are years ahead. The company does have about $231 million in cash and no long-term debt, but is burning through $600 million a year in operational cash and capital expenditures. Like all the EV makers, it's going to have to issue shares to raise funds and is years from profitability, but with a market cap of just $281 million versus Tesla's $579 billion, even $11 billion for Rivian, if it can squeeze out just a fraction of this market, it could be a 10x or higher return. I'm actually surprised GameStop isn't higher on our list, both for institutional investors and for Robinhood retail investors. Despite being the Reddit stock that started it all with a 1,600% surge in January of 2021, it's only the 35th most widely held stock among Robinhood investors. And looking at ownership data, only 14 hedge funds and 341 institutional portfolios hold the shares. And besides that OG status for meme stocks, GameStop isn't as bad off as many of the others we're going to see on this list. You see, balance sheet health is the biggest factor we need to look at for these companies. Almost all are still unprofitable, and investors need to know that the company has enough cash for operations just to survive while it turns itself into that growth. Where a lot of the Reddit stocks are crushed under debt, GameStop used that meme frenzy to issue shares for cash. The company has over $1 billion of cash and short-term investments against just $488 million in long-term liabilities. Now that gives it over $500 million in net cash to survive. So GameStop has the time, but the problem here is it doesn't really look like management knows what it wants to do. Its plan has included moving further into e-commerce and crypto with a partnership with FTX, so that's not going to happen, and there haven't really been any new releases for plans to replace the dying retail business. I think that's why a lot of retail investors have lost interest and why the big money still won't touch it. That said, again, it has that cash to survive, while a workable plan could see the shares higher. I'm going to be using some research and data from Seeking Alpha for this video. If you want to check out more of that analysis, I've set up an exclusive deal for all you out there in the Bowtie Nation. Use the link below to try Seeking Alpha, and if you decide you like it, you'll get a 50% discount to premium access. That's $120 off, the lowest price you're going to find online. In fact, it's lower than the price I paid for access when I signed up, so look for that link and check it out. BlackBerry, ticker BB, falls next on our list and is so different from what I remember. Seriously, when I was coming up as an analyst, everyone had a BlackBerry mobile device. We talked shit, we traded ideas and inside information. Some analysts have multiple devices, an official one and a secret one. But the company has completely reinvented itself as an Internet of Things data and cybersecurity product. Its QNX operating platform, along with support, is used across IoT infrastructure and automotive. BlackBerry is targeting strong market growth in that IoT and cybersecurity segments, projecting 20% revenue growth to $43 million in its IoT segment and 10% in cybersecurity to $770 million by 2027. The problem here is management is having a tough time delivering on those goals. Analysts expect revenue to fall 7.5% this year to $664 million and only grow to 4% to $690 million next year. BlackBerry has $712 million in balance sheet cash against $573 million in long-term debt, so some runway there, but at that rate, it's going to be nowhere near its $1.2 billion revenue goal by 2027. That's probably why BlackBerry has dropped to 45th on Robinhood's 100 most popular list among retail investors, and only 15 hedge funds and 355 institutional managers are betting on the stock. Now, what did surprise me here is that insiders of the company only own 1.8% of the shares. I would like to see more confidence than that from management. Shares of Bed Bath & Beyond, ticker BBBY, have completely dropped off the Robinhood 100 list, though it still is popular on Reddit. A last-minute issue of preferred stock in March raised $1.1 billion and saved it from bankruptcy, but I gotta wonder if it's only a matter of time. The company was already struggling before the pandemic, with its last profitable year in 2018. Now it has $2.9 billion in debt, with interest payments sapping what little profitability is left. And the company is attempting a reverse stock split to prop up the price and avoid being delisted, but it's yet to come through with any real plan on a turnaround. There are still some investors hodling, though, including 15 hedge funds and 275 institutional investors, but I gotta say, I think there are better stocks on this list than this one, and just as good as an upside. Now, the sixth most widely held of our Reddit stocks is Nokia, ticker NOK, and this one has me asking myself, is this really a meme stock? I mean, to me, a meme or a Reddit stock have always seemed like those big turnaround bets with lots of risk, but also lots of upside potential. And I'm thinking, Nokia? Really? Now, the company did have a good fourth quarter, with revenue up 11% year over year, though the full year 2022 revenue growth of 6% wasn't quite as impressive, even though the company has expanded from a mobile provider into cloud services, infrastructure, and other technologies. The growth here is likely single digits for the foreseeable future. On the upside, the company is profitable, which is something most of the stocks on this list can't say. Nokia is expected to report 46 cents a share in earnings this year, which would put the valuation right around 10 times on a price-to-earnings basis. That's pretty cheap for a tech company, and it's the 34th most popular stock among Robinhood investors, just edging out GameStop. It's also widely held among institutional managers across 577 funds, though only 42% of the outstanding shares are in the hands of those hedge funds and big money players. So Nokia probably isn't going to make you rich like some of these could, but it's probably the least risky of the stocks on this list, and the only one that pays a dividend. We've still got 5 more Reddit stocks to watch, including 2 I'm holding for long-term returns. But, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. We're into the top 5 of our Reddit stock list with Lucid Group, ticker LCID, though this isn't my favorite EV stock. Lucid had a reasonably good 2022 with production of 7,000 vehicles and a 22-fold increase in its sales to $608 million. The company reported 28,000 reservations as of February and plans to double its production to 14,000 vehicles this year. And although the stock did fall, it wasn't the $1.5 billion capital raise from the Saudi Public Wealth Fund that worried me. We knew that funding was coming, but what worried me here was the 28,000 reservations was down from 34,000 in September. Now, the company delivered 2,000 vehicles, so that means around 4,000 customers canceled their orders. Lucid EVs start around $87,000, with some well over that $100,000 price tag, so that recent price competition from Tesla and Ford could be hurting sales. Lucid did announce a limited-time $7,500 discount on some models, but it might need to cut further. The company's balance sheet shrank to $1.74 billion last quarter, burning through over $2 billion in just the 3 months. The funds from the Saudis helps, but more shareholder dilution is coming before Lucid becomes that cash flow positive stock. That said, the stock is the 12th most popular among Robinhood investors and widely held by over 650 institutional managers for 12% of the company. That Saudi Public Wealth Fund holds 60% of the company alone and will be able to provide all the funding Lucid needs until it's profitable. We compared Lucid versus Rivian last month, with Lucid the more expensive stock at 25 times on a price-to-sales basis. Now, while it's absolutely possible that Lucid may produce the higher return over the next decade, I like the lower valuation and the more developed production profile on Rivian, and I own the shares. I was surprised by number 4 here. AMC Entertainment was so high up on the list of our institutional owners. Our shares of AMC and its preferred shares, the APE, are the 6th and 7th most popular among Robinhood investors and still daily talked about on Reddit. But I was surprised that 400 institutional managers are holding the shares with over 25% of the total shares outstanding. Yes, the company has the liquidity to squeak by for another year with $631 million in cash, but also $9.4 billion in long-term debt that really just makes the business unsustainable. Look at it this way. AMC was last profitable in 2018, before the pandemic. That's when it only owed $6 billion in debt and before streaming really caught on. Now it has hundreds of millions in additional interest expenses and has to compete with that direct-to-streaming market. But that's not to say that the short-term traders don't have the potential to make a lot of money in AMC. The company has filed with the SEC to convert its preferred equity, that APE shares, to common. And I believe that's eventually going to pass, bringing the APE shares higher to that common share price. The company plans to reverse split its shares 1 for 10, which is going to bring the stock price up, but really does nothing for the company. Without a strong long-term plan for paying down that debt and getting profitable, it's exclusively a trader's stock. One of my favorite stocks here is the third most widely held, SoFi Technologies, ticker SOFI. Now, SoFi started as a student loan refinancing company, but has since grown into the best digital banking opportunity in stocks. As one of the few with a banking charter, the company can offer everything from savings and checking to loan and investments, and it's using that advantage to grow. The company grew its deposit base by over $6.2 billion last year, up more than 530% from the year before. Now, student loans do remain a large part of the business, and that forbearance has hit profits, but the clock is ticking on this. The Supreme Court has 60 days to decide after arguments were made in March, and the market has expected news by June. Even on an extension in that forbearance plan, it's only a matter of time before this part of the business starts adding to those profits once again. SoFi is only the 71st most popular stock on Robinhood, which kind of surprised me it wasn't more widely held, but is held by more than 600 institutional managers for 38% of the company. Insiders alone own more than 10% of the company, with a big $1.2 million purchase from the CEO just last month. We're coming up on the 2 most popular Reddit stocks for those big money portfolio managers, as well as retail investors, but it's interesting that more of these weren't those penny stocks. We're averaging a 33% return in our penny stock portfolio, with one up over 840% in just 3 years. I've just updated the list with 7 more penny stocks under $5 each, and I'm going to link to that at the end of this video. Palantir started in 2003 primarily as a contractor for the U.S. Department of Defense and intelligence organizations to help identify patterns in datasets. We're talking top secret information analysis here, and it's that level of trust from the government that has helped it be so successful in the private sector. It's since expanded beyond this, deploying its Foundry system to enable company-specific app development so companies can use their massive amounts of data for better decision-making. It's powering the U.S. vaccine programs and clinical trials to distribution. It's helping the FAA analyze patterns to minimize travel disruptions. Palantir is the 29th most popular stock on Robinhood, just edging out AMD, and held by more than 1,000 institutional managers for a third of the company. Insiders also own 10% of this stock here, with a good sign for confidence in the future. But for me, it's always been about valuation for Palantir. I'm a cheapskate to my bones, and it's just tough paying 8.5 times on that price-to-sales basis for any stock. The company is expected to turn profitable this year, but with 20 cents in earnings, that's still 42 times on a PE basis. I have no doubt it is going to grow into that stock price, but I just like to see it a little bit lower to get excited about that value. And now, the most widely held Reddit stock by the big money players, Rivian Automotive, ticker RIVN. Rivian is the 27th most popular stock on Robinhood, higher than Palantir and SoFi. More than 800 institutional investors are betting on the shares for nearly half of the shares outstanding. And what really surprised me here is the investment by other companies. More than a third of the company's shares is held by other companies, likely trying to solidify their access to Rivian's technology and potentially as an acquisition in the future. And what I like about Rivian and why I own the shares is it's just getting into that sweet spot where production ramps up high enough that it could start seeing a drop in costs and better profitability. The company reported production of 24,000 vehicles last year and is guiding to 50,000 this year. And while production costs also increased, This is very similar to what we saw with Tesla just 5 years ago as it ramped up production. Rivian issued $1.3 billion in convertible notes last month, propping up the balance sheet, and it announced that its Max Pack battery variants will be available for the pickup and SUV models by fall of this year, increasing its range by over 50 miles for each. Shares fell on that bond issue, but we knew fundraising was coming, so it shouldn't have surprised the market. Shares now trade for just 2.9 times on this year's expected sales, the best deal in electric vehicle stocks. Check out that exclusive offer for Seeking Alpha Premium with the link below, or click on the video to the right for the 7 penny stocks under $5 each that I'm buying right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.